Hey traders, welcome back to my channel. This is going to be a video that is based on time and price and the secrets of those. So I would like for you guys to listen carefully and pay attention to everything that I'm going to say because this is going to be loaded with information. All right. So without further ado, let's get right into it. All right. So accumulation, manipulation, and distribution is an acronym for, or AMD is an acronym for accumulation, manipulation, and distribution. So what happens is we have a true open right here, which is this gray line, and this gray line is the true close. Essentially what happens is price manipulates stops below the true open for it to be a bullish day, and then distribute their position above the true day open, and then has a retracement and then closes right here. This is an example of a bullish accumulation, manipulation, distribution. Now, for some more context, I would like to add in this as my Asian session, and then I would like to add this as my London session, and here this as my New York session. So what is this? This is your Asia getting rated by London, and then London giving a retracement and giving this pullback and huge distribution, and then giving a retracement late New York and giving a closing price. This is an example of bullish AMD. Now for bearish AMD, we've got our true open, which gets manipulated right here, and this is Asia. So Asia stops get manipulated during London. London gives us this push down, and New York opens sometime over here, let's say, and then gives us this distribution lower. And then late New York, we get a small retracement and gives us our closing price. Why does it retrace here? So that it can generate liquidity for the next day. So price can simply give us a manipulation here and then give a deeper retracement into the range, which is from right here to right here, right? Does that make sense? This is why accumulation, manipulation, and distribution work. All right, so now let's dive into some real life examples. But before we do, I would like to describe the quadrants of these levels, all right? So what quadrants are we using? Here we have essentially what is known as quarterly cycles, quarterly theory. So essentially what these are is price divided by 4 into accumulation, which is, let's say, right here, manipulation, and distribution. And what is this last area? It is a continuation or a reversal, all right? This is what happens in the market on a quarterly basis, all right? So once again, quarterly, we can mark out these levels and we can expect certain things and biases to develop during these times. And now I'm going to show you guys how I'm able to do this. So what I've marked up here is the NASDAQ chart. And here, this is from October to almost January, right? So this is 3 months worth of data. So I want you guys to think about it from a logical perspective, mathematics, all right? So how many years or how many months are there in 1 year? The answer is 12, all right? So now I want you guys to develop or divide the number of months in a year, divide it by 4 to make it into 4 quadrants. Now you're going to have January to March, and then you're going to have April to June, and then July to August, and October to December. So we're using the last one of those quadrants to develop our accumulation, manipulation, distribution, and our continuation or reversal. So here we divided this up, and how I did this was I simply counted it out. This is 90 days. So I divide 90 days by 4, which is into 4 quadrants, and I get this. So October 1st, 22nd, November 13th, and all these other values. So the first one, I'm expecting an accumulation to build up, right? So as you can see, price just chopped around, created some highs, took out some stops right here, right? You can see barely took those stops. Let me just zoom in a little bit. Took those stops, and then once this job was finished, it reversed, all right? So it was able to reverse, and then go for these stops. But when did this happen? During the manipulation phase, right? So this one was symbolized as our accumulation, right? And then this is our manipulation phase. So price simply takes out these stops and then gives us a pushback up, and it's getting ready for our distribution phases, right? But the way that this works is price must come into a higher time frame PD array. And essentially what it came into was this daily volume imbalance. That's one. Number two is this imbalance fill, which was in line with this breaker, right? And why was this a valid breaker? Because price this high broke this low, which eventually broke through. So the people are trapped right here that went short at this high. So essentially institutions have to mitigate out of their positions to push price higher. Does this make sense? Right? So now we can understand how this cycle works. So we come into a higher time frame PD array and then we expect a reversal. So price simply manipulates during the manipulation and then prepares for a distribution. As you can see right here, price is expanding rapidly. So what can we expect? We can expect distribution for this stage. And once we distribute, this is the distribution cycle. So how many handles could we have gotten in a 22-day period? 685. Imagine the magnitude, imagine the damage that this can do. It's honestly insane. It's profound, you know? And then for our final session right here, we are expecting a continuation and not a reversal. Why? Because NASDAQ is normally bullish, all right? That's just a little key for you guys. So during the fourth quarter of NASDAQ, you can almost always anticipate a continuation. With Forex, it depends. Which liquidity pools are we coming into? Which higher time frame POI are we coming into? Are we coming into a monthly order block? Are we coming into a monthly fair value gap? These things matter, all right? And as you can see here, how simply I made it for you guys. This is so simple. Accumulation right here, manipulation into a higher time frame PV array, and then a distribution right here, as you can see from this big candle, and then a continuation right here for the fourth quarter. And how simply I made it for you guys, because this is the last quarter, so I divided it up into 4 quadrants, which 90 divided by 4 is around 22 days if we're rounding, and this is what we get. And then here's a little surprise for you guys. What happens after? We get a retracement, right? So after this time ends, price retraces, all right? This is kind of amazing, right? This is amazing because price simply just reversed after this quadrant finished, right? So this was our 4 quarters, and after the 4 quarters ended, this reversed. So this is the power of quarterly theory and accumulation, manipulation, and distribution, which I have to give credit to ICT and Day about, because they have amazing work. And I just wanted to show my personal way of how I used it, dividing it into these quadrants here using the last quarter of accumulation, manipulation, and distribution. Now let's look at an example from Forex. Okay, so as you can see, I have marked out the first trading day of January 2023, which is the 2nd of January, which is Monday. So this will go into quarters, right? This will be our accumulation, and then the manipulation starts during the next season, right, which is April, the first trading day of April. We get a manipulation right here, manipulates these stops, retraces where? To a valid area, all right? So this is key. And then price simply gives a distribution right here, right? And where does it come into? Another valid area. This order block right here. So price simply shows us his hand by manipulating right here in this season, this quarter, and then after that, what you get is simply a distribution to the downside. And for quarter 4, we have either a continuation or reversal. All right. So this is very key. Here, accumulation, manipulation, and then here it just goes for another round of manipulation. And why does it come into here? Because we have taken out these stops and we have came into a higher time frame PD array. And after that, price simply gives this reversal and distribution. And for the fourth quarter, we get a reversal or a retracement. All right. And it was kind of obvious that price was not going to continue lower from here because, first of all, we have taken out multiple equal lows, these equal lows, this low, and price needed a place to retrace from, which is this order block. And if we actually go into the weekly, we can refine this down to this imbalance fill. Price taps in and then pushes higher, right? So this is kind of key. But yeah, so this is the accumulation, manipulation, and distribution on Euro. So this is going to wrap it up for this Secrets of Time episode, I should say, because it's going to be a continued series under the confluences. And I would like for you guys to comment what questions that you guys have, and also give me critique on the work. It would be very helpful to me to know where I'm going wrong, if I'm going wrong anywhere, like what else you guys want me to talk about. And also subscribe and turn on those post notifications so that you guys can be alerted when I give out new content for you guys to see it immediately. All right. God bless y'all, and I'll see you in the next one.